Hello Keystone investors, welcome back to another video. Alright, let's kick things off. Picture your favorite supermarket. You've got aisles upon aisles of different goods, right? Well, think of the world of cryptocurrencies as a gigantic supermarket. Just like you might not buy one of every single item in your supermarket, it's usually not practical or financially feasible to buy a little bit of every single cryptocurrency out there. Enter crypto index funds. They're kind of like a pre-prepared grocery basket filled with a mix of different cryptocurrencies. Now, just like you'd want a balanced diet from your grocery basket, diversification is super important when it comes to investing, especially in something as volatile as cryptocurrencies. Think of it this way: when you're only investing in one thing, your financial health is entirely dependent on that one thing. But when your investments are spread out across a variety of cryptocurrencies, a downturn in one might be offset by an upswing in another. So whether you're new to the crypto game or looking to beef up your existing portfolio, understanding crypto index funds could be a real game changer for you. Plus, we've got some juicy tips coming up later in the video that you definitely don't want to miss. Now let's break down what index funds are. Picture your favorite music playlist that automatically includes every new hit song from a certain genre. An index fund works in a similar way, but instead of songs, it's a type of investment fund that automatically includes a selection of stocks, bonds, and in our case, cryptocurrencies. It's set to follow specific rules, so it's essentially on autopilot. This means it can save you a lot of time and effort in trying to pick individual investments. Now you might be wondering how crypto index funds differ from traditional ones. Well, the key difference is in the name itself, crypto. Traditional index funds usually include stocks or bonds, but crypto index funds consist entirely of cryptocurrencies. This can make them a bit more volatile, but it also means they have the potential for significant growth. And remember, no two crypto index funds are identical. They can vary based on which cryptocurrencies they include and how much of each they hold. So in a nutshell, crypto index funds is like a pre-packaged investment bundle that can offer exposure to crypto markets growth and diversity without the need to buy and manage a bunch of different cryptocurrencies yourself. If you've ever heard the saying, "Don't put all your eggs in one basket," you'll understand why diversification is so important in investing. In the context of cryptocurrencies, diversification means spreading your investment across a range of different coins rather than investing all your money in just one or two. This is precisely where crypto index funds come into play. Crypto index funds offer an instant ticket to a diversified crypto portfolio. Instead of having to research, buy, and manage dozens of different cryptocurrencies individually, an index fund allows you to invest in a broad cross-section of the market with a single purchase. This means that even if one cryptocurrency in your portfolio takes a hit, the others can help balance out any losses. But it's not just about risk management. Diversifying through a crypto index fund also means you get exposure to a variety of cryptocurrencies, including potential hidden gems that you might have not discovered on your own. This broad exposure can increase your chances of being invested in top performing coins, contributing to the potential returns over time. Now, when it comes to risk, it's important to note that all investments carry some level of risk, and cryptocurrencies can be particularly volatile. However, compared to investing in individual cryptocurrencies, where the fate of your investment can be tied to the performance of a single coin, index funds can help to lower your risk. By spreading your investments across a range of cryptocurrencies, crypto index funds can help smooth out the peaks and the troughs of the market, potentially making your investment journey a little less of a roller coaster ride. And now it's time to dive into some real life examples of crypto index funds to give you a clearer picture. A well-known player in the crypto index fund world is Bitwise 10 Crypto Index Fund. Think of it like a basket holding the top 10 heavy hitters in the crypto game, including big names like Bitcoin and Ethereum. So instead of buying each coin individually, you make one investment and get a piece of the whole crypto pie. The best part? The contents of this basket are checked and updated monthly, so it always stays fresh with the rapidly changing crypto scene. Now over time, this fund has shown solid growth, reflecting the upward trend of the overall crypto market. The Grayscale Digital Large Cap is another big name you might have heard about. This fund is like a VIP pass to the most successful digital currencies out there, featuring the likes of Bitcoin, Ethereum, and Litecoin. So by investing in this fund, you're essentially placing your bet on the overall success of the top-notch players in the crypto world. Up until now, the returns from this fund have been quite impressive, reflecting the growth of these high-flying digital assets. But remember, just like with any investment, what happened in the past isn't the guaranteed preview of what's to come in the future. And then there's the Coinbase Index Fund, which represents the cryptocurrencies available for trading on the Coinbase platform. It's weighed by market capitalization and offers a good snapshot of the broader crypto market. Now, each of these funds provide a different blend of crypto assets, but they all share a common goal: to offer investors diversified exposure to the crypto market. So whether you're looking at Bitwise 10, the Grayscale Digital Large Cap, or the Coinbase Index Fund, each one offers a unique way to invest in a wide range of cryptocurrencies without the need to manage each investment individually. Alright, so now it's time to get into how you can become an investor in crypto index funds and what you need to think about before taking the plunge. Firstly, there's a variety of platforms where you can invest in crypto index funds. Some of these platforms might be traditional brokerage accounts like Fidelity and Schwab that offer access to such funds. However, there are also dedicated crypto platforms like Coinbase, Gemini, and Bitwise. Each of these platforms can have different fees and minimum investment requirements, so it's worth doing a bit of homework to understand which platform suits you best. When it comes to investing in a crypto index fund, there are several key factors to keep in mind. Diversification is a crucial aspect to consider. You need to understand the level of diversification the fund offers and whether it matches your investment goals. Generally, a fund with a wider range of assets can help you reduce your risk. Don't forget to also look at the expense ratio. This is the cost that you'll need to bear for the management of the fund. As a rule of thumb, a lower expense ratio is better because it means you get to keep a larger share of your investment returns. Performance history is another important factor. While it's true that past performance doesn't guarantee future success, it's still worthwhile to look at a fund's historical return. This can give you an idea of how the fund has performed over time. Liquidity is key. You need to ensure that the fund you invest in has sufficient liquidity. This means that you can easily buy and sell your shares whenever you need to. The funds that are more liquid are generally easier to trade and have lower transaction costs. Get to know the management team. The expertise and experience of people managing the fund can significantly impact the success of the fund. And finally, understanding your own risk tolerance is crucial. Crypto investments can be quite volatile, so it's essential to be comfortable with the level of risk you're taking on. By considering all these factors, you'll be better equipped to make informed decisions about which crypto index funds best fit your investment strategy. Now, as we've been waxing lyrical about the positives of crypto index funds, it's also important to address the elephant in the room: the risks and challenges. Yes, there are a few, and we need to be aware of them as much as the benefits. Let's start with market volatility. Crypto markets are known to be wildly volatile, which means prices can swing up and down in a very short period. For instance, if you remember back in 2017, Bitcoin's price skyrocketed to nearly $20,000, only to crash around $3,000 a year later. That's not for the faint-hearted. So if you're considering investing in cryptocurrency index funds, you need to be prepared for these roller coaster rides and understand that the value of your investment could fluctuate significantly. Next up, we have regulatory concerns. The world of cryptocurrencies is still relatively new, and the regulatory environment is still, let's just say, a work in progress. Different countries have different rules and regulations when it comes to cryptocurrency, and these can change quite quickly. For instance, some countries have embraced cryptocurrencies, while others have banned them outright. Changes in regulations can have a significant impact on the value of cryptocurrency and, by extension, crypto index funds. Regulators might decide to crack down on certain practices or introduce new rules that could impact the operation of crypto index funds. For instance, in the US, the Security and Exchange Commission has been keeping a close eye on the crypto space, and any new regulatory moves from them could have a dramatic effect on the market. So while crypto index funds offer a number of benefits, it's important to go in with your eyes wide open and fully be aware of the risks involved. Don't just get carried away by the hype, but make sure you do your homework and understand what you're getting into. After all, as the old saying goes, don't invest more than you can afford to lose. So there you have it, a beginner's guide to crypto index funds. Whether you're a seasoned investor looking to diversify your crypto holdings or a newbie just starting to dip your toes in the crypto pool, we hope this video provided you with valuable insights. Remember, the crypto world is continuously evolving, and staying updated with the latest trends can help you navigate your investment journey with confidence. And that is the end of today's video. Keep learning, stay curious, and I'll see you in the next one.